Let's talk about results. So, if sort of the baseline is maybe that 30% collection rate on patient balances, what have you seen with PayZen?
The other thing that other side of the equation here that we are very proud of is that our NPS scores are between 75 to 78 from patient perspective, and the average in healthcare is in the 20s. Patients love using PayZen because of the automation, the user experience we provide. It's very transparent, very easy to enroll. We're asking you a couple of questions and providing you offers that are very easy to say yes to. Around 78% of patients who receive an offer from PayZen end up paying their bill.
Welcome to the Scale Healthcare Technology and Innovation Podcast, where we explore how innovative technology is revolutionizing U.S. healthcare. Hosted by Jason Schifman, President of Scale, we sit down with industry leaders to uncover the strategies, breakthroughs, and technologies shaping the future of care. Join us and subscribe as we dive into the cutting edge of healthcare innovation.
All right, welcome to our next episode of the Scale Community Technology and Innovation within Healthcare podcast. I'm pleased to be joined by Itzik Cohen, the co-founder and CEO of PayZen. PayZen is a company offering AI-powered patient financing solutions within healthcare. So a very interesting conversation today on a topic that is near and dear to all of us, both on the provider side as well as on the patient side in terms of the patient balances and the patient balance experience holistically. So looking forward to the discussion and welcome, Itzik.
Thank you, Jason. Thanks for the introduction and happy to be with you.
And I guess a fun side note, I've got my first professional basketball player guest on the podcast today. Itzik was I think 11-year veteran in the Euro League playing for
7 year.
7 year playing for.
But I played. I'm pretty tall. I mean, the video conferencing platforms don't do justice to people who are really tall. I'm a lot taller in person. I'm 6'8", so yeah, it's been a fun ride playing professional basketball as well.
Well, I'm a big basketball fan, a big Knicks fan, so an extra honor to have a professional basketball player in my presence today. So maybe before we get into PayZen, we can begin with your background. I know you spent a lot of time in consumer finance, technology solutions, and innovative ways of approaching consumer finance outside of healthcare and maybe touching upon healthcare. But I think it'd be helpful to start with you sharing a little bit about your background in some of those experiences and how those experiences have shaped how you've thought about patient financing within healthcare.
Yeah, so you're right. I mean, the lens we were using when we entered healthcare was a fintech lens based on our experience in fintech. And myself and my co-founder worked together at Prosper. You probably know Prosper as one of the early peer-to-peer lending companies that shifted into marketplace lending, and was a part of the fintech 1.0, as I would call it, companies. And we learned a lot. I mean, we learned a lot about what to do, the issues with being a fintech company when it comes to regulations, when it comes to technology, when it comes to growth, funding. And we did quite well. I mean, the company grew quite a bit and was a part of that first wave of marketplace lenders. And the first time we actually even looked at healthcare as a business was more of a data-driven kind of decision. Was at Prosper, we were asking people who are getting personal loans from Prosper reasons for taking a loan. It wasn't an underwriting-based decision or question. It was more about marketing, getting some data, and doing some research. And one of the fastest growing type of reasons for a personal loan was medical bills, paying medical bills. That kind of started some thinking with me. I was chief business officer of the company, so I was part of the leadership and being responsible for top line growth. Thought about, okay, well, how do we serve that market even better? And what we did at Prosper is we actually acquired a healthcare finance company dealing with more of the elective side of healthcare, not the non-elective. And I'll give you the evolution of thought around moving into what we're doing right now at PayZen was We were basically targeting dentists who needed to offer finance, more of the elective plastic surgeons, fertility clinics. These are the types of healthcare procedures we were financing. And for those procedures, elective procedures, interest was an appropriate type of product. So our product at Prospers always carried some form of an interest or cost to the consumer. But when we looked at the broader data set of US healthcare, we realized the bigger problem is not in the elective care market. The much bigger problem, growing very fast in the last two and a half decades, is the non-elective market, because the way health plans have been structured with deductibles that were growing, or I would say a shift of payment responsibility from payers to patients, where the consumer or patient became the payer, essentially. That's the consumer view. But of course, if you're a healthcare provider, component of your revenue that used to be relatively small, I would say 30 years ago, around 5% of your revenue used to come from the patient. And right now, or at least last year, 25% of your revenue is coming from patients. That's a significant growth of a shift of your collection strategy, or how you get paid, that has to do with dealing with patients rather than payers. So if you could collect 95% of your revenue by dealing with 4 different commercial payers and Medicare, so you had 5 calls to make, really. Now you have to call 1 million people to get paid fully at the same levels. We were thinking about, okay, well, that's the provider view. From a patient view, affordability is becoming unsustainable as well. I mean, essentially, again, taking last year's number, the average American with health insurance and a job, or an average family, had an out-of-pocket burden of about $4,500 annually. Most families cannot afford those type of expenses. Typically, it's unbudgeted, it's unplanned, right? I mean, nobody really plans on going to the doctor and needing some procedures. So it comes as a surprise and a shock, and people have a problem dealing with it. So that's kind of the source of the problems. I'm fast forwarding after PayZen, when we decided to do something together, myself and my co-founder. It was pretty clear to us, this is the market we should go after, because essentially, we know how to lend. We understand data and technology. We have a lot of experience in operating in the space. And there's no one really who's doing it in an automated, autonomous way that takes care of the patient and the provider at the same time, being kind of the technology layer that enables all of that affordability. And we entered the market with that in mind, essentially having a very simplistic view of saying, well, we can approve everyone. We should underwrite everyone, which is not something that actually being done today in the market. I mean, providers are trying to help patients by giving them some form of spreading the balance over time, but they're not doing it in a very systematic way. I mean, they're saying, well, if Jason has a $1,000 bill, we'll give him 4 payments, or we'll give him 5 payments. But usually they will not extend it beyond a year, because they don't want to carry it on their balance sheet. And there's no real affordability check like the latest and greatest fintech technology, where we actually understand your capacity to pay and actually providing you a customized payment plan, interest-free, that would be suitable for you. And that's how we entered the market. We needed to find product market fit, and we found it relatively quickly. There was a lot of need in the market. But interestingly enough, we were pretty naive when we got into the market, thinking that just a fintech approach, proper fintech approach, without really understanding the complexity of the healthcare market, from when it comes to the operational challenges in the healthcare market, would suffice. I'm fast forwarding, obviously 5.5 years later. We are a lot better at this now, and have multiple products, and expanded the lens we're looking at the market from just a payment plan problem to an affordability problem that you can solve using data and automation.
So let's try to put some color to the 25 cents on the dollar that providers are typically interacting with patients on today, that's grown from 5%, as you mentioned. I'm wondering, do you have any statistics on the typical collection rates? So out of that 25 cents, provider groups typically collect, is it 50%, 75%, 25%?
It varies, but I would say that the national average is around 25 to 30%. So if you take a provider that has, let's say, $1 billion of net patient revenue, 80% of that on average comes from the payers and 20% comes from, again, I'm giving some round numbers. It's not accurate. So think of that 20% of your overall revenue would come from the patient. And from that 20%, you would typically collect 30%.
On the patient side, you mentioned you at Prosper, you had to focus on the elective care, and now you've had to broaden your exposure to get to the core of the challenge and the opportunity in the market on the non-elective side. Do you see any trends in the non-elective, the patient balances that are driving the largest share? Is it surgical procedures? Is it inpatient procedures? Is a certain type of patient demographic, or is it really across the board? It's a combination of high value, low value, commercial insurance, and really across the board
it's across the board
facing the same challenge.
It's across the board because even when you have Medicare, you have some participation in Medicare. Medicare doesn't pay for everything. So we see commercial insurance, Medicare, Medicaid. We see a lot of different types of insurance that we're dealing with. The same goes for procedures. It's a very broad range of procedures. I would say that typically the reason for the out-of-pocket is related to a high deductible, co-insurance, out-of-network type of fees. These are the types of out-of-pocket reasons you see. So, essentially the deductibles are the lion's share of the problem.
So the typical experience, provider side, you probably send out a couple statements, maybe 3 statements. Maybe you send them to collections. Probably a collection agency that's not going to go after a patient credit is the standard in the market, I would say. And then to the point you raised, on average, you collect 20 to 30 cents on the dollar. And so you have large accruing, debt, and you also have a team and an infrastructure that you have to build to support the collection. And so that's kind of where the market's at today. On the patient side, maybe you're negotiating or communicating with your provider about a payment plan. Maybe you're using something like Care Credit if it's offered by your provider. But that's kind of the status quo. How is PayZen improving upon the status quo from both the patient side and the provider side? What specifically is PayZen offering to do that?
First of all, providers want to help their patients and they want to help themselves, right? So there's no lack of will on the provider side. They're really trying to help patients afford care. And, so you're right. Generally, you're right about what's happening, the status quo, even though it's changing very quickly. What we do is we do things a little differently. We're not waiting for the third statements and bad debt treatment. And we're trying to automate the entire process using a lot of data and predictive and AI kind of approach. So when we integrate with a provider, we get a ton of data from the provider. That data is being enriched by PayZen. It's being enriched with a lot of financial attributes and other sources of data that help us do our calculations and modeling a little better. On top of that data set sits our models, our affordability models, which is kind of the big part of our secret sauce, call it. And we are really good at predicting who might need help right away, might be a full payer and will pay anyways, and who might be eligible for financial assistance, because that's another set of problems that, as I said, I indicated before, we entered the market with a payment plan approach, but now we expanded into the entire affordability problem, which is a much broader problem than just you paying your bill. Affordability doesn't start at the bill side. It starts pre-care. A lot of people will forego procedures because they don't think they can afford the procedure. So they'll actually delay their care, which is bad for them and bad for the provider as well, because they're not providing any services. When we look at data post-procedure, pre-procedure, we look at estimates, we look at a lot of different, it's a very rich set of data that we're looking at. Our models are helping us predict who might need help, who might need some treatment, and what solution do we need to kind of match them with. So some of the solutions are occurring pre-care. Essentially, somebody who have an estimate for something they need, we think they'll need help. The staff of the provider is approaching this patient with the care card of PayZen. Right? The care card is more appropriate for a pre-care solution or a longer care cycle where you need multiple swipes. Again, it turns into a non-interest payment plan, but it gives you the capacity to schedule your procedure, put a down payment, the provider gets paid, you know you can afford your care, and you move on and get treatment. The post-procedure problem is being taken care of with our payment plan automation. And in some cases, we found that some patients shouldn't even be billed. I mean, they should be in financial assistance or charity care and either get a big discount or even get a bill forgiveness because of their financial situation. Providers don't know who might need financial help or not, unless somebody actively applies for financial assistance, which doesn't happen very often, by the way. So essentially, with our predictive analytics, we can actually determine and then underwrite the patients to the solution that they might need and automate the entire process.
So in the case of the care card, is PayZen actually financing that care card? So essentially the risk is being underwritten by PayZen.
Correct.
And on the patient evaluation, where you're saying that you sort of run some data sets to inform the provider group and the patient about how they can work together and just what the profile is. What types of data are you looking at about the patient and about the procedure in order to come to a determination of that patient's financial profile vis-a-vis this care?
So you said it. I mean, we're looking at, past procedures, insurance type, employment, different other attributes that we enrich the data with, like financial attributes, credit attributes, employment, debt to income ratio, payment to income ratio. I mean, there's a lot. We're dealing with 30,000 different financial attributes that are going into our predictive analytics and models. And our models are getting tighter and tighter as we go because they're obviously being trained as we move forward. So that's another great advantage of doing this early, is that we have a very mature model now with very high probability of accuracy that is driving the right decision and offer to patients. Of course, everything we do eventually will require some automatic underwriting. So we actually, when we provide a payment plan or a care card or underwrite you for financial assistance, we actually do proper underwriting. But we start from some predictive analytics to say, well, what do we think Jason needs? Does he need any help or not? We might just leave you alone because we think you're somebody who would look like somebody who will pay. But if we'll see you next month in the same status, we might change our mind because, we say, okay, well, Jason looked like somebody who can pay, but didn't. So should we approach him with some kind of an offer that will provoke some action from Jason's side? So it's amazing how proactive people are when you give them some options that are more suitable for them, which is just what's lacking right now in the healthcare industry. I mean,
so options could
send you a bill and expect you to just understand what it is and pay it. But
options could be, pay monthly over 12 months, 24 months, whatever the case may be. And it sounds like
in some cases it's 60 months, right? I mean, it depends how large the bill is and your financial capacity.
And are you ever getting into a scenario where you're saying, or, pay now or pay on a shorter timeline and receive a discount to the total cost? Or you're really focused on 100%,
We focus on 100%. And we are, because, when you actually forgive debt to people, you're getting into some tax situation. If you're basically saying, well, they billed you, and now they're saying, well, we'll give you some forgiveness without proving that you are financial assistance eligible, then that might give you some kind of put you in a certain taxation issue because essentially it is taxable, by the way, debt forgiveness.
So if PayZen is financing, at least on the care card, but it sounds like in a lot of these scenarios, PayZen is ultimately stepping in, accelerating cash flow to the provider and underwriting the collection activity with the patient. If it's all interest-free, which it looks to be from the website, how does PayZen handle the risk associated with that collection activity?
Well, we're bearing the risk and providing the option to the provider to finance those payment plans on day one. So obviously we are really good at risk calculation, and we also have financing costs, which are a part of the term that the patient received. So, if you have a 24-month payment plan, we are calculating the non-payment risk that you represent and the term of financing those assets and making the offer to the provider to either keep it on their balance sheet and us servicing the patient and paying them monthly, or financing it on a non-recourse basis. That means buying those assets off their hands and taking it off their balance sheet. So most providers, I think we have one provider that is not financing. Most providers want don't want to be the bank, right? So they say, look, you're paying me in advance more than I get paid over time anyways. So it's a very easy decision, and that's how we get paid. So the delta between what we charge and what we collect is our revenue.
So there's either, they're paying some type of, the provider is paying some type of interest charge on the advancement.
They're bearing the cost of the payment plan and the
Understood.
financing.
Understood. Which markets are you focused on today in near term? Is it health systems? Is it all clinical specialties? Are there certain size profile that it takes to make sense?
So our ICP have evolved over time. We started with, I would say, what we call today mid-market, which is providers that are smaller. So I would say average of about $300 million in net patient revenue, then very quickly evolved into what we call today the enterprise market, which is kind of the 300 to 3 billion in net patient revenue, and now have several national health systems that are very large. I'm talking about 30 to 50 to 60 billion dollars of net patient revenue. They're multi-state, very large with hundreds of hospitals. So we have a variety of segmentation. So I would say that our sweet spot is health systems and hospitals and very large physician groups.
Let's talk about results. If sort of the baseline is maybe that 30% collection rate on patient balances, what have you seen with PayZen?
So first of all, let's talk about the provider side. The providers on average see around 32 to 35% increase in their collection rate using PayZen. So what I'm saying is, if you collected X before PayZen, we will basically make sure that your collection rate is going to be around 30 to 35% more than that. Now, the sale or the engagement with the providers is very involved because we're not just promising things. We're looking at a lot of data before we even engage with the patient, with the provider, and let's look at your performance. How you currently perform? Where are your issues? And we come up with a plan or business case that say, look, if you do those, the next, we can basically stand behind a promise that you would see a lift of about 30 or it's the reason I'm a bit cautious when I say it's always 30 to 35. Sometimes it's higher than that. Sometimes it's lower than that. Some providers are really good at what they do and have less of an issue. It really determines also, what kind of a geography the provider is in, right? So, but on average, we see around between 30 to 35% increase in collections. The other thing other side of the equation here that we are very proud of is that our NPS scores are between 75 to 78 from patient perspective. And I don't know if you know the average in healthcare, but it's in the 20s, right? When it comes to patient satisfaction. Patients love using PayZen because of the automation, the user experience we provide. It's very transparent, very easy to enroll. We're asking you a couple of questions and providing you offers that are very easy to say yes to. I guess around 78% of patients who receive an offer from PayZen end up paying their bill. So that says a lot about the approach. And just from my personal perspective, and I think that everybody in the company shares that because we have a very clear North Star and mission, reading patient feedback about how we save their lives or how we transform their health situation is the better part of our day. I mean, we're getting a lot of great stories about, it's fantastic to work and start a company that is doing well as a business. I mean, and we're doing very well. We can talk about our growth trajectory in a minute, but knowing that you're doing something very positive in the world and really changing people's lives in such a positive way is one of the reasons that a lot of our employees are so passionate about our business. I mean, we're transforming people's lives.
How do you handle the operational integration? I mean, that conversation with the patient involves the front desk, it involves the scheduling team, it involves the financial counselors in some organizations. And so there's the algorithm, there's the application, which sounds like is pretty user-friendly, but then there's the people-driven part of the conversation and the process. And I would imagine there's some work to do on integrating and training on that.
I'm smiling because that has been the biggest eye-opener for me as an entrepreneur and the CEO of the company. Let's just put it this way. When I started the company, I had hair. And realizing how complex, operationally complex this business is.
Yeah.
Because, we're coming from the technology side, and we thrive to automate as much as possible and try to create those scalable systems that will just work at scale. But there are so many moving parts and so many nuances in this business that have to do with people, different vendors that the provider is using, sometimes using an RCM company or an early out, or different types of operational complexities that are not all standard per provider. Trying to scale the business and scale that operational part of the business has been the biggest challenge for the company. So I would say we had to learn a lot. We were very naive when we started the business. We're great. We're doing much better now, but again, still a lot to build and be better at from the operational side. Because you're right, this business is anything but standard. So there's no real standards around how people are doing certain things. And
the other hurdle I would sort of speculate that you're facing or could face is you're selling to a CFO who has some view that collections could be better on the patient side, but isn't necessarily keen to pay a financing charge on collections. And so this dynamic and this point of inflection of, is the 35% uplift better than the financing charge I would face? And so do I end up in a net better place? Do you face that challenge? Do you find that your counterparts are well informed on that dynamic to be able to go through that conversation objectively and not emotionally? Or is that a challenge as well?
It's not a challenge if you know how to explain the value you provide, right? I mean, again, this is another thing we had to learn. How do you articulate the value in a succinct way to people who make those decisions? So I have to say that we're not starting from the financing as a value. We're starting from two different axes. First of all, more people will pay their bills. So we're growing the pie of people who pay that you didn't have before. Because essentially, all of these people would go to your bad debt treatment, essentially. So you have more bad debt, and with us, you have less bad debt and more people who pay. So we're growing the pie. That's one value that we provide that you didn't have before. The second part is people who enter our payment plans are more successful in completing those payment plans, because if you do it yourself, and some providers, or not some, almost every provider we deal with have some form of a payment plan option on in-house. But if you look at if we actually analyze the performance of those payment plans, I mean, sure, you provide payment plans. How much do you actually collect on those payment plans? And what are your costs of running those payment plans when it comes to collection costs, payment processing, servicing, capital reserves? There's a lot of costs that are associated with all of those payment plans. Compared to how much we pay you in advance, it becomes a no-brainer. So essentially what we're doing, the reason I said it's a very involved and very, transparent explanation of the value we provide to the provider in many different levels of value. Financing is not a must. You don't have to finance. So if you don't like the financing bit, fine. Just get more people who pay you and wait for the money. That's great. And your costs are still going to be better, and you're still going to be providing a much better value for yourself, because you're going to have, on average, around 35 to 38% more patients will pay their bills. So there's a lift there already. The question is, do you want to finance or not? That's your decision. I mean, you don't have to finance.
One of the, I think, most important things you said is that the NPS scores have been really high. I think patient collections is extremely sensitive, and it's rare that you find elevated NPS scores when it comes to increased collection rates. I'm wondering how you achieve that. What is it that allows you to get those outcomes? And more importantly, if I were a provider group and I were transferring the follow-up activity to PayZen, how do I feel comfortable that my patients are going to be treated with the appropriate sensitivity and without some of the more aggressive collection activities that some in the market have, the bad stories that we hear in the market?
So I think that the secret here is all about our thesis. Our thesis is, every person who is on a payment plan wanted to pay. We offered them a payment plan. They clicked, they got underwritten, and they made a first payment. So obviously, These are good people who are trying to pay their bills. They're not people who just ignore offers to pay their bill. There's the intent to pay. So the whole philosophy here, and we don't call it collections, we call it servicing, right? Because we think that those people are good people, but some people have issues down the road that are unexpected. People lose jobs, people's circumstances have changed. And it is our job to get them back on track because we feel like, well, they wanted to pay. Let's help them get back on track. So these are not people who we need to run after and collect money from. They already made that first payment. So the whole approach is extending a helping hand, saying, well, and we're using a lot of data for that in automation. So if you lost your job and we see it because your payroll has missed in your bank, right? We have full integration. We will just come to you with an offer and say, hey, do you need more time paying your payment plan? Do you need a payment holiday? And we'll give you a month, 2 months, whatever, right? I mean, we'll tack it on at the end and people will take that offer. Or if your situation has changed and your spouse lost their job and now you cannot afford that payment plan that you signed up for, we might give you better terms and lower your monthly payment because, you want to pay, we're going to help you get back on track. One of the most amazing data points that I've found, we have found as a company in this business is that we're able to cure over 50% of people who went delinquent on our payment plans and to get them back on track. It's almost unheard of. Again, it goes back to the thesis. These are good people who made the effort to pay their bill and they had the intent to pay. Let's treat them with that respect. The other thing we make providers a lot more comfortable with us is showing them our servicing policies. We will never sue patients. We don't furnish data to credit bureaus. We don't have legal strategies. We don't sue patients. We don't do aggressive collections or anything. So our job is to try as much as we can to get people back on track because we think they might need some help. That is a major driver of our amazing performance and our NPS scores. Because we treat people with respect and we think that's the right approach.
And is the data, that we're talking about credit scores and other types of publicly available data, or are there sort of data sources that I, as a patient signing up for this payment plan, would be giving you access to?
We use bureau data to underwrite people, but it's more about, am I giving you the right payment plan that you can actually afford? So how do I maximize your repayment success while giving you the appropriate term, right? So instead of just using a table like most providers do today, like, whatever the $1,000, give them 4 payments. If it's 8, whatever. Nobody's really looking at your capacity to pay. I mean, how much is your income? What is your obligations every month? Are you renting or do you own a home? What other obligations do you have when they calculate the payment plan? And we do a very good job at underwriting. That's a part of our expertise.
You look out over the next, call it 3 to 5 years, what are you most excited about in terms of PayZen beyond just more adoption and market growth? Is there additional functionality you have on your roadmap and radar? What is it that you look forward to?
Yeah, so first of all, let's talk about the market. Right? If you look at the entire market we are dealing with, the potential, last year, health providers, health systems, physician groups in the United States billed patients after insurance about $500 billion. Okay, so it's a very large market. When you think about, how can we actually accommodate most of that market? We think that around 30% of patients will need either pre-care or post-care flexible payment options. What I mean by that is payment plans, care cards are a good solution for that. We think that automating more and investing more in the financial assistance part will increase our capacity to help more people in more use cases, essentially. We also think that now using our data with automated, either synthetic voice, chatbot, or tools we provide to the providers to navigate affordability problems based on real data, based on our models. Now we have enough data to train an entire LLM, right? Based on our success, our underwriting, and everything we know about predictive analytics to say, well, if Jason asks a question about, how can I afford this procedure? We'll be able to give you the right track, all the options you might have, and give you the solution right there and then. So think of the costs it will save providers and the better transparency it will give the patient when it comes to their options. It's based on the best data that we have. And I think that providing that elevated user experience to patients and providers with more tools that are driven by this data will be a game changer. So essentially, call it a navigator, call it, some kind of a triaging of affordability for any patient who asks any question about what can they afford. I think that this is where
an AI-powered financial counselor for
correct.
for these organizations.
Correct.
Do you want to be the AI counselor, or do you want to empower your clients' AI counselor organizations, or a little bit of both?
Look, our strength is our data and our ability to predict and offer solutions. Whether it's our chatbot or other chatbots are using our data and offer that service, that's not the point. I mean, LLMs are kind of a commodity right now. I mean, who is presenting the chatbot is one thing, but who has the data and who has the solution? That's where the unique moat is, right? So we think that over the last 5.5 years, we developed a very unique data set that is showing amazing results in the market. Why not provide that type of value in other forms when it comes to people just asking questions about their affordability and what's the right approach there? So we think that it will lower cost, improve service, and offer more solutions to patients that they currently were not aware of.
Last question I have on my side is just a sense of the scale and footprint of the business in terms of patients or number of clients. Would love to just get a...
Yeah, so look, I mean, we were growing very fast, which is a blessing and also it's a challenge. We've been tripling our business now for 3 years straight and doing the same this year. So I guess it's a testament of the size of the opportunity and the need in the market. And by the way, certain changes to Medicare this year are only accelerating the need for providers to have better cash flow. And they understand that they're going to have less cash on hand than they thought before, because there are going to be some changes to how Medicare is compensating. But, we're helping hundreds of thousands of patients already, right? We're probably going to get into the millions this year and next year, and growing our provider sets to, we're doubling and tripling the number of providers we're engaged with through partnerships and direct in the market. So we feel like, we're in the right market with the right solution and have a very compelling business opportunity, value that we offer both providers and to patients. So I think, the problem is how do we scale the company and deal with the scale and the operational complexity, and that's the challenge. That, quite frankly, that's the thing that keeps me kind of awake at night, is how do we make the business more streamlined and less complex?
Well, look, the patient balances, as you opened up saying, growing from 5 to 25% of revenue, it's clearly an unavoidable topic. It's obviously also a very delicate and sensitive topic for patients as well as for providers. So, I like the approach that you've taken, which is seemingly based on transparency and high quality service and appropriate sensitivity along the way. So I commend you on that, and really stood out in our conversation. So Itzik, I really want to thank you very much for taking some time out of your day to share a little bit about PayZen. I wish you lots of continued success, and
thank you.
Again, really appreciate the time.
I appreciate it. Thank you, Jason.
Take care.